Hi everyone, Michael McVety back to talk a bit more about the rental market analysis for Southwest Florida. That includes Fort Myers, Cape Coral, Port Charlotte, and Naples. I hope that this blog is very informative for you. I know that the Naples Daily News picked up on this blog and used it for one of its recent articles. And I'll also be speaking to our local property management group in May regarding these numbers and what's happening in our marketplace. So hopefully this works out to you, whether you're considering investing in the area or you currently have investments in the area. I just felt that, generally speaking, there's a lot of information out there, and sometimes it's confusing. And I just wanted to give, from my perspective, a property manager of 25 years and a landlord here in 25 years in Southwest Florida, my perspective on what's going on to create some clarity for you. Okay, so we're going to talk today about a couple of different things. One, the national housing situation. And again, there's a lot going on at the national level, and that affects our emotions, our sentiment, and how we think that the real estate market's going in the area. So we're going to talk briefly about that. We're going to talk about what we see as a management company here in Southwest Florida. Again, we manage low, middle, and high-end rental properties all throughout Collier County, Lee County, Charlotte County, and even into Sarasota. So we're going to give you our numbers, and then closing, we're going to talk about the interest rates, market corrections. I'll give you some more information on where I think things are going to go. So first of all, we're going to talk about the national level. And we're talking about single family homes. Again, this is from Zoman and Associates, a great company with a lot of information. And they're looking at, first of all, seasonally adjusted occupancy. So what they're talking about is what does it look like for single family homes at the national level? Let's see if I can kind of highlight this here. You can see over here that we're down at the 95.5% level. And this again is showing an occupancy at the national level dating back about 10 to 11 years. It hasn't been this low. So when you're hearing about how there's not enough, housing and so forth, that's interesting because we still have low occupancy at the single family home level. Now, next slide here, we're taking a look at new move-in rent growth. So in other words, when somebody is moved in, how is that rent compared to the previous renter? And you can see once again, this is very, very low, one of the lowest. Here's a quarter of 2024. Right over here, you can see it's almost at a kind of 1%. Okay, and again, the last 13 years, we've not had such little growth at the single family home. So we're nationally at a standstill. And if you want to look at this other slide, this is called the seasonally adjusted. Again, they're keeping this in mind for February, where in some months up north, maybe February, they don't get a lot of move-ins versus down south. We might get more move-ins in February. They're blending this all into the data to make sure it's kind of constant. And what we're seeing here is what happens versus also including not just people that move in, but also people that are renewing. What's happening with the rental rate there? And you can still see it's at 2%. It's interesting. It matches Q2 of 2020, which is when we had COVID, the national shutdown. So you can see right now that we're still pretty low in that regard as well. And then looking at another source, Zillow, I thought this chart was interesting. It was saying, actually, it's not Zillow, I'm sorry, it's HUD. This slide's for HUD. They're starting to say that single family home starts are starting to pick up year over year from 2023 to 2024. And the multifamily continues to decline in terms of production or new units being built right now in the pipeline. So you'll see nationally less apartments, and nationally you'll see a few more single family homes. So let's get into the second part here for Southwest Florida. What I do here is I take one source, so this way I don't have all kinds of different sources that might have different methodologies. I take a very reliable source, and what I do is I take a look at the numbers here. So here's January, February, March, month over month, meaning I take at the end of the month, what's the actual figure. So you can see in Greater Fort Myers here, we can see that the numbers are kind of going up a little bit for three-bedroom homes. Okay. Luckily, the numbers are still kind of holding between 2,000 and less for a three-bedroom and 1,700 or less if somebody wants to get a three-bedroom. Now, notice this doesn't deal with square footage. It's just, hey, if I'm a consumer and I have $1,700. How many properties could I get that 3 bedrooms? All right. Now in Cape Coral, what we have here is we're starting to see again an increase. So from January, we have 950 all the way up to 1,182. So the inventory is increasing in Cape Coral. You're seeing as well the number of properties 3 bedroom that are $2,000 a month less or less. 223 properties now. So that's increasing. And at 1,700 level, you can see that it's also kind of like went down in January and started to increase a little bit more into March. Lehigh Acres, same thing as we're seeing a trend going up higher. So you're seeing that, 536 in January all the way up to 673 bedroom homes available to rent. You're also seeing that the number of 2,000 or less, it was high, then it kind of went down in February, and now it picked up again in March. And luckily, though, at least the number of 3 bedrooms that you can rent in Lehigh is down slightly for the 1,700 or less. And again, these numbers mean that if you have a large amount of $1,700 or less of properties that people can actually rent, what that means is that that puts pressure on the 2,000 and higher rentals, and that theoretically this 100, 600 should eventually maybe go into this area if it can't rent, and these will go into this area until we get back to sorry about that, back to more market saturation. Now, Port Charlotte, this is really interesting. Port Charlotte has remained really, really steady over the last quarter. In fact, it's the most stable in Southwest Florida, you would say, in terms of just remaining steady. There's not a lot of cheap rentals. There's not a lot of new inventory, so to speak, that's being added. In other words, they're building up in Port Charlotte, but people seem to be absorbing those numbers. That's great news for Port Charlotte. And Naples, again, kind of holding steady. The one 2,000 or less property is now gone. Sorry about that, guys. So that's a little bit about the Southwest Florida data. Now, a couple of points on this, really important. Furnished units. Now, what's interesting, and we're going to see in a couple of slides, what happens with sales. So if somebody has a sale and it's not going well for them, they're considering renting it out. And normally what would happen is when you have furnished units, you normally choose a seasonal type of idea. I'm going to rent it out for a couple of months and that sort of stuff. So this way, the problem of your furniture and removing it for an annual rental, you don't have to do. You can just keep your furniture there. Everything's good. But what we're starting to see as well is that people are saying, "Hey, listen, I'll do whatever, annual, furnished, or not." So a lot of these rentals, when I'm looking at it, hey, is it seasonal? Is it annual? It's becoming increasingly difficult because some people are looking at furnishing their properties for annual rentals, or in other words, they have furniture there and they're offering it as an annual rental, not even a seasonal. And then also pre-construction. So what's happening as well is you have a lot of builders that are throwing rental properties on the market before they're even built. So they're having stock photos and that. So it's very hard to know when those units are actually coming. Are they coming in 2 weeks, 2 months, that sort of thing. So just a little bit of note on the data. Next up here, applications for our company. So we've started to see pretty good number of applications in 2025. Very similar in line in many ways to last year. 2023, just a note on that. Like obviously, 2023 was good for numbers, especially in February. That was awesome. However, keep in mind that that was right after Hurricane Ian. So Hurricane Ian hit in 22 at the end of September. So as we were going through the flooding and the properties in October and November, a lot of people were starting to get displaced. So that could have affected some of these numbers. So as well, when you're looking at the number of applications we receive, what's important to note is it depends on the number of properties we have. Like, so for instance, if we have 28 properties for rent on the market like we do right now, actually, I think we've rented some more, so maybe it's down to more like 25. But if we have a large number, you should normally see more applications coming in. And likewise, the type of property that we have should also affect the number of applications. So if we have more lower end properties, say around $1,000 a month, that has a tendency to get more applications than say a $4,000 or $5,000 a month property that like we have right now. So let's take a look as well in the sales market. This is interesting. This is the Zillow's slide I want to show you. So we're looking at Southwest Florida, and they had what's called a heat index. And what it looks like is as things heat up in red, in areas in red, what that means is that it's more of a seller's market. And as things get colder up here, it means that it's harder for you to sell. It's more of a buyer's market. So they did these areas here: Naples, Cape Coral, Fort Myers, Punta Gorda, and Port Charlotte and Northport. All the areas, according to Zillow, when it comes to sales, have had the worst February in 7 years. Okay, so what that basically means is it's much harder in the last 7 years for you to sell your home today at the prices that you want. That's why people are lowering their actual asking rates or price, and then some of them are not still getting that number that they want, and they're turning into rentals. We see that a lot today. So the final segment I just want to talk about is just regarding the interest rates. A lot of people, make a big deal about the Fed interest rate, and I just want to show you something that if you're interested in like refinancing your property or you're interested in buying a property, it's not really about the Federal Reserve rate. I mean, yes, that's a key component, but it's actually not directly. So here's a year look at the Fed rate, where you can see that from August to kind of January, it went down by 1%. Okay. And, for some of you, you might have like an adjustable rate mortgage called an ARM, and you're like, well, I'm not seeing the rate go down. Like I'm hearing that the Fed's lowering the rates and that. What's happening? Well, when you look at this, actual current rates, you can notice that over the last year, it was at just over 6.5, and you go all the way over here, and it's still at 6.5. So in other words, if you were looking for over the last year, we're basically at the same rate. This is the blue is a 30-year fixed rate mortgage, and the green is 15. Okay, but you'll notice that there was a dip close to 6% here around September and October of last year in 2024. There's a reason. What you really want to do if you're interested in adjustable rate mortgages, or if it's going to go down for you, or if you want to refinance, this is what you really need to look at. It's the 10-year Treasury note, or the T-bill as they call it, and you'll notice that I did it again year for the entire year. You'll see that once again, it's very similar to what you saw with the rate mortgage. And look at what happens here. When the United States Treasury bill, what the government offers you to, for you to invest in their money over 10 years, it's at 4%. Basically, it was just a 4.25% right now. You can see that down here in September. Whoop, I apologize for that. I clicked too hard. You can see down here that in September of 2024 and October 2024, that's where it went down. That's right in line with, again, what you saw here for the lowering of mortgage rates. So if you're interested in that, again, look at the U.S. 10-year Treasury note, because that's really important. That's what really affects the interest rates. No doubt the Fed does as well, but it's more about the U.S. 10-year Treasury bill. So just final thoughts. So we're rounding up here. So notes about inflation and construction. So what's going to happen in the near future? So inflation has a big impact on the Fed, as well as unemployment. So those are the two things that when the Federal Reserve is looking at lowering their interest rates, which affects a lot of things, what's happening here. So first of all, the oil production for the United States and government spending, this first point. So right now, the oil production is just over 13 million barrels in the United States, and it's going up by the end of the year to 14 million. So that is good. So you should see energy prices relax, okay? And then as well, you've been hearing a lot of things, I'm sure, in the news about the United States government, about temporary layoffs and court cases and everything else like that. But I think the bottom line really through all of it is that the United States government is really trying to spend less money. That last year that they had a 2 trillion or so deficit, they're trying to cut that back, because they realize there's no way that they can continue going in that direction. So in addition, the Fed looks at the economy. Is the economy right now slowing down? No, it isn't. So well, actually, there's a couple of different methods or measures to look at it. The unemployment rate right now is at 4.2. They had the newest jobs reports come out, and so the actual employment actually increased. So in January, it was around 111,000 new jobs, and that was adjusted slightly down. That's the adjusted number. In February, it was 117,000, so went up a little bit, and then in March, it was 228,000. So employment really kind of took off in the United States in March. The unemployment kind of held steady, but again, I've done unemployment. Sometimes that number is a little bit weird. Again, big thing, tariffs. So what's happening with tariffs that's creating a lot of instability just because people don't know what long term is going to happen. So we can debate. I can do an entire session on what I think about tariffs, but the bottom line is that a lot of construction companies fear that some of the raw materials that they need to build, like lumber and that, might go up. So there's this idea of we're going to be gaining manufacturing, but is the cost to produce homes more difficult? Okay. Because of tariffs. And then also just, our season's over basically down in Southwest Florida. What typically happens is a lot of people leave the area. So there tends to be a little bit more of an economic slowdown. So if you have a rental property that's on the market right now, it's not going to necessarily get easier. I mean, yes, I understand that you could rent your home out right now, but as people leave the area, don't necessarily look for that. Chances are you might have to, again, adjust to the market and lower the rent, or your asking rent, that is. And then finally, people would normally ask me, hey, Michael, what do you think about this current market oversupply? In other words, is it going to keep going? What's that look like? Are they slowing building, that sort of stuff? Well, right now, like for multifamily, it takes years for them to build. So, like I put in a previous blog, there's a lot of units coming on online, 6,700. And what's really interesting is that in 2023, i.e., last year, um, Lee County, of all counties in the state of Florida, Lee County had the most building of single family homes in any county in Florida. Okay, so 67 counties, we had the largest with 10,702 single family homes. So when you're building a lot in Lee County, you have to have a lot of people that are moving in, and normally that's around 30,000 a year that we get people coming in. Right now we're overbuilding, so look for the next year to two where the building stops, where we start lowering the supply, and when people are coming in, it's going to start stabilizing the real estate market. So I'm Michael McVety, president of Red Fortress Property Management. If you have any questions or comments, or you're confused about some of the things I said, feel free to email me, Mike at redfortresspm.com, and it's right down here on the screen, Mike at redfortresspm.com. If you have any questions, any way I can help, let me know. I hope you have a great day, and I really hope that this information is useful. Just wanted to clarify what's happening in our rental market right now in the first quarter of 2025. Enjoy, have a great day.